Wake up, goddammit. Welcome to MarketCast with Unk and Market Monk. Morning, P. How's your week? Flip back here.
Pretty good. I actually didn't really anticipate that end of the week melt up like that. And I was positioned bearish on some stuff, but it actually worked through fine. So I guess like that just showed the strength of those because like Ulta talked about that one a lot. And then kind of looking at like MDB when it was a little overextended, and the tech rally interestingly didn't really carry over to the SaaS stuff that well. So um, definitely wasn't an everything rally, and I guess we'll kind of see what this week brings. So I didn't chase much, but obviously those were some pretty historic moves by Nvidia and some others.
Yeah, to be honest, I've been staying away from ERs until afterwards. Um, and if I'm going to play an ER, it's usually the other direction and not the continuation of a 25% move like that. Um, Week was good over here, though. Traded off the Bees move screener, probably 80% of it. Outside of like Laser and DM and um, Nat, I don't think I played much more from our stuff. So a lot of weird bios with news. Um, Only caught one. I probably that's a good ratio. Let's say I got in three of them that moved over 100, 120%. Um, I only got one of the three, and I didn't get all of it, but I got more than just a regular
Yeah.
trade, just a quarter or a nickel out of it. Um, so that just kind of shows that ratio, and I'm trying to track that a little bit as I play these momentum plays. Um, how many home runs do I miss or I'm not in, or do I close out and then they move that I actually get? Just to have a ratio for people so they don't feel discouraged. But I'm thinking it's 2 for 10 is probably good. So we're 1 for 3 last week. So I'm going to keep track of that stat going forward for people. Um, but yeah, real hard
Uh,
to catch the full moves in the slow market. Volume's just not there. It takes 4 hours for a move that used to happen in an hour and a half. So
yeah, and I think we've sort of returned to these stocks making these big breakouts, and I guess the thing to keep in mind there, like I look at Marvel, and obviously just up 32%, and it's breaking back into a zone it used to trade in. It used to have this kind of 60 to 70 thing going. So that move that it made opens that up, but at the same time, I don't think it's the time to buy Marvel. You want to see what it wants to do here because it could just fall all the way back to I don't know, like $53 or something like that. So I think you just have to be careful returning to winners is how I would probably put it.
yeah, no, I write down. I know the list varies for both of us every week, but I write down 20, 25 stocks, 30 at the most a week on this list. And over the last like 6 weeks, I'm looking at my chops here, like which one of these is gonna moon this week.
Yeah.
Because we always are on one play that has a really good run. It seems like the last few weeks. That I think kind of mentioned it towards the end of the other video about Marvel that was the first one that you picked in your top three that was off my list. So
Yeah.
those are 1 for 1 so far.
Right.
Keep track of that going forward. Market still all about the kind of get back on that. Market still all about the debt ceiling to you, or you see more than that going on right now? For
Yes, because I think we're far enough out from the June rate hike, which I think they probably will do a hike, but that I don't think that's going to quite affect things just yet. But I kind of think the debt limit thing might be a sell the news, to use that cliche. I think there's definitely a possibility of that, especially if we gap up in the pre market. I think we might sell back off a bit. But yeah, I think the debt limit, and specifically as it impacts a few things I look at, like solar. Definitely interested in that.
Yeah, I think it's ruling the world still. I don't I don't know how much of a run we get when they close it, because I do think we're gonna run for a, I mean my mental note right now is 2.5 days, but I think we get a
Yeah,
really good run after the debt ceiling, with a lot of the stuff that's lagging, not necessarily a lot of the stuff that's ran already, pulling the weight finally. Um, but I don't really have um, a reason for that not to kind of pull back to levels. So still trading off levels is going to be very important, or breaking through levels and into a new range will be really important for me. But yeah, I see that coming. For SPY, we've talked about 430 for a while. That 420, 430 range, we could be there again, like we were with the 400 to 4, what was it, 412? Was it
yeah.
412? The 409, 412 week. So I don't know how much upward push there is, but I think that debt ceiling is going to be a good catalyst for it. The market's not responding to a lot of the other regular numbers, which is good. That's what the normal market would do, not make a 20% move off of PMI or GDP or anything like that. Um,
Yeah.
so I see that, but I don't know again how much top end there really is. Do think another catalyst we're not talking about is crypto failing, or people not being able to get their money out. When they get it out, or if they can get it out, or if they have any more, um, it's going into stocks. Inflation's kind of killing that. Just sitting in my
Yes.
checking
Yeah.
account, sitting in my
It
checking
it
account.
and it's one of the reasons I keep talking about still being short MSTR, but I think it's really easy if you try to go short term puts on this stuff to get for it to go against you, because they have just such a crazy range, and coin's the one that really really stands out for that. But yeah, this the stocks are definitely, the outlook is down, and but how well they bounce back in a given day just kind of depends on things. But I think the Binance and Tether are the two major downside catalysts that I think are going to play out. And it's funny with Binance. I mean, they were really promoting this partnership with the soccer player. What's his name? Ronaldo. That's like
Okay.
a major player, right? Yeah.
Yeah,
So
retire,
anyway,
retire.
yeah, so they're doing all this stuff, and it's just so eerily similar to the FTX Tom Brady thing. I don't know. I mean, it's and the fact that Binance was so instrumental in FTX's downfall, and it kind of masked a lot of their issues. Every time you get you have the third world adopting crypto supposedly, but you
Sure.
have developed countries keep putting these additional restrictions. Australia banned Binance. Binance already has to operate in the U.S. in a different, like a different company, essentially. Like you can't download the Binance app and use it in the U.S. You have to use this different one. Canada banned them. So like that stuff's going to continue to happen, and each of those events doesn't necessarily, not knock down crypto like that day, but it's kind of, there's some smoke there, and I do think we see some big jolt to the downside for crypto pretty soon.
The problem with like the Binances and the FTXs that I've learned along the way, actually it was the buddy I was golfing with, trying to get me to invest in this like algorithm thing, and his money's locked up in there, like he can't get it out because of FTX. So if anything happens to
Yeah,
Binance, I'm assuming there's another, 100, or I don't want to say thousands, but there's at least 100 coins that are banked through Binance. So I mean, you're gonna have that happen again if anything goes wrong with them. So it's kind of like a pretty big halo effect if anything happens to those guys.
yeah, and you think about, like, in terms of what would it take for Bitcoin to double from here? Because it's done that throughout its history, right? But so you have to have either a bunch of fresh new buyers who get excited about crypto. It's hard to imagine that happening to me, given the environment, or you have to get this like really wide like institutional adoption of it. And institutions, they're just controlling crypto through derivatives like they do, like they do stocks, as it is. So they can put a lid on it if it starts to run anyway.
Yeah.
So it's some of the purity of crypto's early moves in its history have a lot of obstacles, I think, these days.
Yeah, I think I don't see a reason for it to have a catalyst to make it go back to where it was anytime soon. That's just not a.
Yeah.
It's I don't know. It's a pet rock, right? That's what I always say.
Yeah,
Um,
yeah. And for like people saying that AI has kind of displaced crypto, there's something to that, and AI also has more utility to it as
yeah.
well. So, yeah, I'm with you there.
So that's a good topic of the moment, and get a couple opinions on this AI. We've definitely had like let's say a AI rally, um,
Yeah.
or an AI a theme push or a sector push in AI. Is this the next, like tech bubble, .com bubble, not bubble, but like, because before you have a bubble, you got to really get overextended in a lot of things. But
Yeah.
where not just the big names get it, the sub companies are also going to start to run, and then the companies that use it or offer it are going to start to run, and you just kind of get that onion effect of you get out to layer 5 of AI, where the whoever supplies a Nvidia and AMD for their processors, oh, you need silver again, or we're going to get way out there. Like EV is another good example. EV did that too. Is AI that, or is it going to be short lived? Um, what's your thoughts on that?
No, I mean, I think it's here to stay, and it just seems to have relevance for about every industry I can think of. I mean, I'm in education. That AI thing is huge, and it's not just students cheating on essays. It's in terms of like research applications and stuff like that. And then I mean, even like my friends in oil, like AI is starting to get into that with drilling and everything. So no, I think it has some staying power. I think you're going to get these individual short-lived runs in stocks that probably aren't justified just based on some hype. Um, Nvidia, like I would be one of the. I think there's a lot of reasons to be cautious shorting that, but they have a little bit of a monopoly over some aspects of
Yes.
AI with that CUDA uh, platform for programming GPUs or whatever. Like that, uh, you're sort of stuck with them in a certain sense right now if you want to pursue some of this. So I don't think they're just going to fall completely back like some people do. But
Yeah.
the commodities, implications, that I mean that's interesting. That certainly could come about as well.
Or I mean, even like who makes it first? Dutch Brothers, Starbucks, or BlackRock are having an AI, through the drive-through, or Wendy's, or Shake Shack, or um, something like that.
Yeah,
Who has the
Wendy's
who?
actually
Yeah, they
they
announced it.
actually are pursuing that. You see
Yeah,
the little
yeah. That's
tunnel delivery thing. Yeah.
yeah. That's what made me think of it. So like, whoever comes out with it, is it going to be where whoever comes out with it first gets a 10 to 20% bump in stock price because of it? Are we going to be in that kind of a market because of AI? Is that the thing that gets us out of this? I don't know, this Ukraine war market. I don't know what else to call it at this point in time, but we're just trapped inside of a range with no real hope. Um,
Yeah.
is the AI rally that does it? Because I mean, that was the tech. When the internet came out, that was the thing. Those stocks weren't going to make it. No one's got a computer. No one's got a computer to go buy online, and then
Right.
everyone 10 years later has an iPhone in their hand. And that company made a good comeback as well because of the .com. It was left for dead. I mean, without the internet, what's Apple doing, right? Earbuds. Uh,
Yeah.
and they
Yeah.
don't
Well,
have.
right. And I think that the poster child for the tech bubble is Cisco, right?
Yeah.
Because they had all
Yeah.
the networking and
Yeah.
all that stuff.
Yeah. So who's that? Is that
Yeah, well,
is that the
and
market
that's
we're
what
in?
right, and people try to say that Nvidia is the Cisco, but
No.
my caution with that is that Nvidia doesn't have kind of all its eggs in one basket, and they have a lot more staying power, I think, um, than Cisco did. It's just, yeah, it's not a good historical parallel to me.
No, I don't think it is at all. They just kind of just added they're more like the Disney of tech, or they just added, oh, we can do that too, right? And they just add
Yeah,
another thing. Anything that is done with technology, whether it's self driving or anything like that, gaming, anything like that, they're just like, yeah, we do that. So they're like they got the Disney comparison to me, where they just have a really big umbrella in that
yeah,
regard.
yeah.
They cover it all. But we've and I kind of missed. I mean, I caught him, but I didn't catch the full move at all, and I probably could have done a lot better. But I mean, it pushed the entire semiconductor sector. Like, there's not much that hasn't moved with it, especially since
Yeah.
the AI is with it. But um, I'm interested in,
Right,
like,
and what I and you can I can see it in the flow where different semiconductors are likely to take off, and obviously like Marvel, definitely had the perfect timing to have earnings and everything. The extent to which individual semiconductors are connected to AI is something I don't 100% know. Like I can't tell you,
oh, sure,
how much Qualcomm is going to really be in on this, but it does seem like that they get that push, and then so then in terms of stock movement, you look for who's lagging, and um, a lot of times they'll start to catch up a bit.
yeah. At this point in time, I think they've all caught up. And I mean,
Yeah,
unless it's, unless there's something I don't know, which is totally possible. So looking at conductors is kind of looking the wrong way. That was kind of one of the points I wanted to make. There's other
mm-hmm.
industries and there's other places that are gonna get the wave of AI that haven't even been thought of yet. Um, so let's think about finding those instead of,
Yeah,
oh,
yeah,
look, Nvidia's up here. Is it going to the moon?
right,
I mean, for me, either you got on that boat at like 134, I think was the level, or you didn't. I mean,
yeah.
that just is what it is for me. Um, we'll talk about that a little bit because I mean, it's more for the room for if people do really listen to our advice, but I've been very clear. Like when we started this, like when I first started trading, I just bought stocks that I believed in, and then went back to work. Swung my hammer some more, got more money, and put them in those stocks. Paid myself like a bill, and kept working. Um, Nvidia was one of them. um,
Yeah,
I did better on Nvidia, or like it's impossible for me to do better on Nvidia now um, than I did back then. I did so much better with that strategy with Nvidia um, than I did this time around in this rally of it. So still not a bad strategy if you're not a really well off trader or you're a new trader. Is just find a couple companies and buy when they're red. Um,
yeah,
time will be in your favor. Normally, you don't get 400% moves and or 300% moves in what 6 months, but um, you'll do okay. You'll just do okay in the long run. So yeah, sorry, a little rant on that there, but
no, yeah, I think so, and I guess I would add too that something like a stock like X, just as an example, uh, is something where you can do these pretty long swings. I wouldn't just put into X for 5 years and not look at it, because if you just look at the chart,
sure,
like it does kind of have these ups and downs. So you have to be a little bit more active there. There are, I think, in tech a lot of opportunities
tons.
for that kind of growth that'll then sustain itself. Where some of these that had been up at these ridiculous numbers came all the way back, and can recover maybe like half of that. And even that would be an excellent
Yeah, it's a great.
investment for people.
Yeah,
So
I
yeah.
mean, we, however you want to put it, gave Tesla at 100 and then again at 150. And even if this last move, if you bought that and you missed the first one, you're still you're still up 25%. And people don't understand that that's a great trade, um, especially
Yeah,
when you
and
get into
so and
market cap and stuff like that. Like you got to understand market cap and to know why it's not going to move 300% in what you're buying. But 25% on the year is a great trade. It just really is.
yeah, and what is Tesla 3 to 5 years from now? I mean,
Yeah,
I don't know, but I think it definitely could be back in that 280, 300 range.
yeah,
No reason to think that it couldn't do that. And if it middles around down here for a bit, that's the point of like you're not buying it once. Like those tweets you see where someone's like, if you bought this stock 10 years ago, you're at break even.
yeah,
I
yeah.
mean, that's like, yeah, you bought all of your position at one time 10 years ago at some random day, then that's what you're at now. But if you bought it over time, you'd be up on it.
You'd
So
be fine. Yeah.
yeah.
Not to put you on the spot, but do you have a couple of those? I mean, right now that no brainers 5 years from now.
Snow is one.
You still like snow where
So
it's at?
yeah. I think Snow gets like 220, 240, something like that. In that 3 to 5 year horizon. So that would be one that sticks out.
I'm currently buying Disney. I'll throw that out there. I don't think you
Yeah,
can go wrong there.
I think that's a good one.
Square. Y'all know how I feel about that around this price range. Um, I think you can't go wrong there in 3 to 5 years. Um, and there's a few. I'm not a tech guy, but like there's a few charts like Unity um,
Mhm.
that's like there's no way this is not gonna recover. Um, but again, I
And
do some more DD into those tech companies.
yeah, and phase is one for me, especially down here in the anywhere from like 150 to 170. I think you buy it there, and that'll get back to easily to like 220 to
Oh,
280,
you want to know
somewhere in
my
there.
number one right here?
What's
Because
that?
I have been buying it. Um, I've been buying it for a while though. Roblox,
Oh yeah, yeah.
no brainer. 5 years from now, you tell me Roblox still $40? I mean, come on. Um, but yeah, I mean anything you do a little research on. I mean, especially if you can get it at a good price. PLTR, probably another good example of something that if you were DCA into that down there under 10, you're 30% up right now in a pretty good company. Um, but yeah, do
Yeah, absolutely. And I got two for you. There's a little more risk here, but I think if you look at their like the sector, they're the clear winner to me, and it's Dash and Uber.
yeah, yeah, no, I
Um,
like that.
where I think that you realistically could go 80, 100% on those on a longer time scale. Just because I think they've survived sort of the worst of it, and their competitors. Lyft is not going to make it. I mean, someone's going to buy them. I think Uber's got the name. They're in the food thing too, and I think there's enough promise there that they'll survive.
Yes, for me. Like those guys are both in the catbird seat from when Amazon says, you know what, we don't want to do this. We're going to partner with somebody,
Yeah,
and they're
absolutely.
perfect.
Doc U's kind of in that category for me too.
Well,
Got to be patient with that one.
as soon as you said sector, I was like, you could probably go into any of these dang sectors that we follow or subgroups of stock, I mean, like Zillow. Take that out of real
Yeah.
estate. I mean, every
Mhm.
group at this point in time is going to have something outside of those sexy A plus stocks that everybody wants to own. Um, the market is in a good spot for that, in my opinion. But yeah,
Yeah, and
as soon as you said sector, it's like, oh shit, we could go through all of these probably and find one that's in a good spot. Even if it's the third tier company of the sector, you know, um, probably still in a good spot at this point
yeah,
in time.
and I feel for the people who did what we're talking about with Uber at $50, and had to took it all the way down. But in terms of like actually getting into some of these, there, you're not at the bottom, and we probably don't see the bottom again. But I think you are in a spot where you can start to get into them and do pretty well.
Yeah, like a DraftKings. What do you do here? I'm gonna bring that chart up real quick because
Yeah.
it's one that like, well, what do you do? I would love to own more of this, but what do you do with this chart? But there's a lot. If you're in this for 5 years, you're probably still got 100% left here. You really
Um,
do. Their market share is so small. They just have constant reasons to have positive catalyst as each state opens up.
yeah, yeah, and you look at like the DraftKings weekly. I mean, just the brutality of that move from late 2021 to
Yeah,
I guess last summer. You're not likely to see a move like just a downtrend like that again. I mean, if you did, the stock would be like $3. So that's not going to happen to DraftKings in all likelihood.
yeah. No, I think you get most of that back, and if you look at that weekly, that 50 level sure does stand out. But
Yeah,
again, that's a down the road thing. So I mean, looking at this chart on the small term, yeah, we're overextended. We'll probably consolidate here for a while, but that's to me when you buy in those large pockets of consolidation, um, and then
yeah,
go back to work and buy it again.
right, right.
I don't know. I just preach that because it's what really worked for me starting out.
Yeah,
Just even like it's almost like hanging out at the pool. There's another Unk analogy. You don't just cannonball. The high dive is options. The regular diving board is day trading. You need to start over there on the stairs and getting your
yeah,
feet wet.
yeah.
You don't crawl up the ladder and try to do what's the Rodney Dangerfield dive.
Another triple Lindy. Yeah,
Yeah, you can't do the triple Lindy the first week, fam. You can't. Oh,
yeah,
I'm glad we're both old. I appreciate that. Um, yeah, you just can't. You got to go over there and put your toe in the water. And putting your toe in the water is what I'm talking about in that regard. And then,
yeah.
then when you get used to the water, you can go over there and hey, let me try that once. Um, when you're already wet.
Yeah, and I mean, if anybody did what we're talking about with Facebook, I mean, you could probably just keep it forever if you wanted. At the
Yeah.
when we flip bullish on it, so a good spot to be in for sure.
There is not a sexy stock that I mean it's all hindsight's 2020, but there's not a sexy stock that we haven't really nailed since the first of the year. There's really
Yeah,
not. There's
yeah,
really not. When they come on our radar, not only are they on a good support level, but they make a pretty darn big move for their market cap size in a short period of time after. I mean, if you gave us 3 weeks on all these, we're probably 100%. I mean, we're playing ERs most of the time. I'll be honest with you. That's the catalyst when they come out with a big news event. Um,
yeah.
but getting those right, um, I don't know, gives me a lot of hope that man, if we can continue to figure out like our top three and promote that, we're gonna be just fine because we're very very efficient um, in finding the winners in the big names before they run. I mean, we're just early.
Yeah.
I mean, who doesn't want
Yep.
to be
Yep.
early? Would you rather me tell you what to do or be early?
Right.
uh, I mean, and I'll. There's a rebounder joke in there, but I haven't been looking
Yeah.
at that lately. Let's go to SPY here. I'm gonna call it a push. Last week I did the math though. I beat you by like $1 if you do the top and the bottom, but
Yeah.
it was pretty close. So we'll just call it a tie last week. Um, we both
Uh,
had we both had a little more top side um, though.
well, I mean, honestly, the top side came in QQQ, and Spy didn't follow just because of what was happening in oil materials, and healthcare didn't fall, but it stalled a bit. So yeah, the you just look at the breakdown of what's in Spy, that held us back about $5, I think. Um, overall.
Yeah, of course it was $5, so it hit your number perfectly. It held us back
Exactly.
that was back two bucks. Um,
Yeah, yeah, yeah.
I'm curious in the conversation we would have had if Spy would have been flat on Friday, which would have put us back at that 415 range, 416, whatever, somewhere in there. I'd have been real curious that we made that big run on Friday. I just assume we same theory as last week when we were here, or the week before when we were here, that we're just front loading into the debt ceiling getting handled. Just what it feels like.
Yes.
And that
Yeah.
happens on Friday. So, um,
The run to close the week is what gives me a little bit of caution about the debt limit itself being like, I think it's a big catalyst, but being like a sustained catalyst, I think it might we might stall a bit. Um, they might just catch some people chasing. So I think we could get some pretty big range intraday based on that.
give me your numbers. Then we'll discuss
Yeah.
that contra coma.
I'm gonna cap us. I'm gonna stick with my 425 number,
Okay.
and to the downside, looking at, let's see here. Let's say 414.
Is that what you were last week?
Yeah.
No, you're 412 last week. So
Oh, okay.
you pulled up $2. You pulled up $2. I do think they get the debt handled. So I'm gonna go 428. I'm gonna call a run this week. Um, with my downside, what do we got here? That's too far though. I'm gonna go 416. And that's the market's kind of hold up for me, but I think because I know they've already, let's be honest, they've already announced that they tentatively have a deal. So um,
Yeah.
we're not in a market where we're going to sell off on news. We don't have to, right? Good news is bad news. So I do think we run. I said 2.5 days is what I thought we'd get out of it. Um, so I'm with you. I think
Right.
it's a pop and fizzle for sure. I just don't see any substance, and a lot of stuff is already way overextended. Um, but we'll see. We'll see what comes out of it. What kind of deals they make. I mean, that's going to be a part of it. Is what they, you know, what they concede and what they say they're going to stop spending on is going to get hammered. But that's going to come 2 days later after everyone reads it.
Yes. And as far as there aren't the earnings this week, there's some names that move pretty large on their own, but they're not exactly the things that move the whole market. So Macy's and Nordstrom, I mean, that's really important for that niche sector, but Salesforce is not going to move the whole market the way Nvidia does. So those reactions to earnings will be more isolated, I think, than we saw last week. So yeah, it's all about. I'm saying that to say it's basically all about the reaction to the government this week.
Yeah, yeah. So you're just looking for me. We're looking for relief in the smaller names if that happens. The stuff that just hasn't really moved or been kind of stuck on a line.
Yeah, and that's something I've been on for weeks was that this whole idea. Everybody talks about the like breadth being terrible in the market, and all that means if you're new is just that the 5 mega caps or 8 mega caps or whatever, that they're basically the whole market rally, and that if you take everything else, I think it's up 1% or so on the year.
Yeah, yeah.
So your Nvidia, Apple, Microsoft, etc. And that is a bad sign. Like that means that the market's going to crash. Well, it also can mean that some of those names will catch up a bit, and Apple will just sort of spin its wheels and do its up 0.3, up down 0.5, whatever, and that some of the secondary names can catch up a bit. So that's the scenario people don't talk about as much, but there's reason to think that might happen too. And I think part of our flow reads are showing that. So it's something I'm looking for.
Yeah, no, I couldn't agree more. And in general, I try to buy things on sale in life. And yeah, you're not. You had from August to April. I've said that a million times to buy those sexy names because they all didn't get up at once. But there's a lot left. You have from now to the end of the year to position yourself, and in the less. I mean, I don't see how Carnival Cruise isn't sexy. I mean, it's the blue chip of the sector, but stuff like that's not going to go anywhere.
Yeah.
That has pretty decent range left. There's a ton of it out there. There's a ton of it out there. All the blue chips like Crocs are gone.
Yeah.
They're gone already. Yeah, you've missed out on that.
Monster. Yeah.
Yeah, Monster. You missed out on Monster. That's the new Pepsi. Um, all right, that's good on time here. Unless you got something else you want to add, get to work. If
Uh,
not,
no, that's good. Yeah.
perfect.